This is Lynn Schrader with KHI, and here in the room we have, and I'd like to introduce our keynote speaker for our training this morning, Tiffany Bomer. And Tiffany comes to us from Coventry, and KHI is excited to kick off a series of what I'm referring to as new and innovative products in the employer group space by our three major carriers. And Coventry is going to lead us off today to talk to us about their stable funding product. I believe next week we've got United Healthcare that's going to be talking to us about their stable funding product that they call All Savers, and then Wellmark will have on in May to talk to us about their self-funded product. So we're excited to have Tiffany, and Tiffany, I'm just going to turn it over to you, and as always we'll open it up for questions at the end of this presentation, and then towards the end we will also be going through some of Aetna's specialty products. So we'll have a quick little break while we change PowerPoint slides, and then we'll go into that presentation and answer any questions at the end of that. So a little two-part today. But I'll go ahead and turn it over to you.
Okay, great. Thank you.
Yep, and I just need to click. Yeah. There you go.
Okay. Okay, great. Okay, just as a starter, we always like to show our core values, and just a reminder that the people that we serve are the center of everything that we do. Today we're going to talk about why Coventry Stable Funding, the value that it brings to small businesses, give you a product overview, and review some of the components, as well as give you some information about the customer reporting, and then have some opportunity to answer any questions that you guys may have. So stable funding for small groups. Groups that we're targeting are going to be the small 25 eligible, and we will go down to 20 enrolled. So these are going to be groups that are looking to offer benefits based on their group's medical risk. So groups that traditionally would have been underwritten with a lower a rate, this is going to be a great, this would be a great benefit for them that maybe want to get away from the ACA community rating pool. This would be an alternative that may save them some money. We also include our stop-loss coverage against catastrophic risk. So we have a 30 specific stop-loss coverage and 110% aggregate. And we'll go over that in more detail on a couple of the other slides. So why stable funding? The group will have a stable monthly payment that would go towards their maximum claim amount, and then they have protection against all high claims in addition to that. So if they go over that maximum claim amount that they're paying, they're essentially paying one monthly premium, and if they go over that in claims, then they have protection with that stop-loss coverage. They also have access to Coventry's network and all of the health and wellness benefits. So our point of service, they can either choose from the point of service network or the PPO network. But like we talked about before, the Coventry point of service network is essentially the same as the PPO. So really we're pushing people more towards that the point of service with that Coventry national wrap. And then the best benefit of the stable funding product is that if their claims are lower than anticipated, then they get money back. So here gives a little comparison against the traditional funding and the self-funding, the stable funding product that Coventry offers. So again, you have the monthly payment that goes towards your max claim amount, which is going to be similar to a premium payment. However, again, like at the end of the term, if you are lower than your claim expected amount, then you get a surplus back. And then again, you have access to the same network, and you have protection against claims. So the biggest benefit of the self-funding is that potential of having a lower rate and then having a surplus at the end of the year. So just some of the employer challenges with the ACA is increased regulation, less flexibility, rising cost of benefits with that community pooling, the administrative headaches of having to figure out the age-banded rates and how you would do the 50, like if you give 50%, what's 50% of this age versus that age, that kind of can become a headache. So this would give you composite rating, which can help eliminate some of that. So these are some of the benefits to overcome some of those challenges: the flexibility, the financial protection with the stop loss, potential savings, and predictable expenses. The predictable expenses, that is, you know, that's what that maximum payment's going towards, is what's expected to be your claims, and then there's no risk because of that stop loss. So we have, again, this kind of hits a little bit more on that monthly payment that goes towards the liability. So there's no extended liability. We have two different options for renewal where we do the 50-50 surplus. So 50 of it stays with Coventry at the end of the term, and 50 of it comes back or goes back into your, and that is given to you as a credit for your next year. And if you want to choose the renewal option, or I'm sorry, the 100%, then you would get 100% return, and that would go as a credit towards your next plan year. If you do pick the 50 option at termination, there is no surplus that you would receive back, but if you did pick the 100%, then you would get a return back at termination. So again, this talks about how the tiered monthly fee is. There's the administrative fee, there's the stop loss premium, and then the claims funding, which includes the terminal reserve, and that just kind of helps us at the end of the year with the run out, the claims, figure out where you need to be for your rates the following year. We do have some preset plan designs that you can look at. If you go to the website, you can just key in chcia.com, and then from the broker toolkit, you would pick the plan grids and then the stable funding plan.
Well, and we can always get those to them.
Yeah,
too,
absolutely.
So holler to them
Absolutely.
Here at the
Yep. We have another benefit is a lowered state premium tax. And then we do a specific bank account, and that money works. So how it goes is they would pay that monthly premium. It would go right into this bank account, and that account is what is used to pay all of the claims from that one account. And again, if you go over the amount allowed, then that stop loss would kick in. This gives you an idea of kind of those fees, kind of broken down with the administrative fee, the stop loss premium, the claims funding, and that would go partly towards that terminal loss fund. And so this kind of breaks down the administrative fee. That includes your medical claims administration, your pharmacy administration, mental health claims, your network management, customer service, run-out claims, coordination of benefits. All of these are included in that administrative fee. So that helps you kind of understand where that all goes to. Now, talking about the stop loss, so what that is, for an individual, the stop loss specific is set at $30,000. So any individual that would go over that $30,000 individual fee for claims, anytime it hits that, then that stop loss would kick in for that individual. The aggregate is set at 110%. So what that is the 100% is the claims amount that we expect that your group would hit, and then that 10% is the risk corridor that, and then that would have, after the end is how we would analyze what your, depending on the claims, that's how we would analyze what the surplus would be. And then that stop loss coverage is provided by Coventry Health and Life. So this kind of gives some information about the aggregate stop loss factor. So again, that attachment point is going to be the total cost at 110%. So if the group hits that 110%, then that's when Coventry would pick up and pay the remainder. So again, those factors are added up by taking the expected claims coverage and then calculating it out to what that would be for the full year to get to that aggregate attachment point. And again, you would have that fixed amount per employee per year, and then if the claims are exceeded, then Coventry would fund the remainder. At the end of your term, if there is additional fees, you would not be required to pay any of those additional fees. Those would still all be covered with the Coventry stop loss. So you won't have a balance at the end of the year if you do go over that 110% aggregate. So the terminal reserve that we talked about, that's set aside to pay out the run-out claims upon termination. That is adjusted annually based on, the claims from the prior year, and that is not a part of the surplus calculation upon renewal. So this kind of shows more of a picture of how the stop loss works. So there's that number 3, next to that number 3 dot, that's the customer, that's your expected liability for their funds, or I'm sorry, for their claims, and the terminal reserve is that added that will be paid with claims for run out based on termination, and that is a 12-month run out. And then the stop loss coverage is when that kicks in. That's once they hit that maximum claim amount, then Coventry would kick in the additional funds that goes anything above that. And then again, at the end of the year, if you were lower, if the group was lower than that maximum claim amount, then that 50-50 would be credited to the customer for the next year. So renewal, the group will receive a reporting that helps them compare their claims to see how they were running, if they would need to adjust their terminal reserve fund, how their premiums would need to be adjusted, and then they will figure out that surplus. And then again, if there's a deficit, then the group would not be liable. The stop loss policy would pick up that extra cost. And then upon termination, the group receives only a portion of only the surplus if they selected that 100% option. And then if they did not select that, then it would all go back to Coventry. So then the end-of-year accounting works by 45 days after is when they would calculate that and determine whether there's a surplus and, what the portion of the surplus would be returned to the employer. There is the group, and we'll talk about this in a few slides later, the reporting. So the employer does have access to see, how they're running, what their claims are versus their premiums that they're paying in. So they are able to see that monthly and know where they sit. So that kind of helps them. This just kind of shows the calculation of termination and how that would work. So again, the surplus would be 100% retained by Coventry unless that 100% option was selected. And just so you know, the 100% option is usually about 5 to 10% higher, so there is a significant increase in premium, but it might be worth it to the group. So our contract periods are a 12-month period with the 12-month run out, and then the same for renewal. This gives you an example of that reporting that I was talking about. So this is a monthly report that you would see that helps you see where you're sitting with your claims paid out and what you paid in. And then also available to you is a quarterly utilization report that helps give more detail. So we have a couple different options of quoting. The first option for 25 enrolled would be the employer risk form that they would need to fill out. That's the same as the RAC if you're familiar with, like the 51 plus. It would be that form as well as the member level census, and it would need to include home zip codes, the carrier invoice with subscriber level pricing, the group's renewal, and their wage and tax. This would be a one final quote, so you wouldn't have to go back and obtain more information. This would be how you would quote that. We also have the traditional uniform health apps quoting, and you would need to also obtain that employer risk form in addition to the uniform health applications. And then we can also do illustrative quoting, and if the group does, oftentimes if the group does, if the rates are usually pretty close to what that the other two options, if the rates are pretty close, then they will keep those rates. Now, for if you have only 20 to 24 enrolled, we can still do enroll them, but the only option would be using that Uniform Health app. We cannot do the census, no application for anything under the 25. And then the quote information would actually be obtained by your KHI representative, and they would submit it to us, and we have a 5-day turnaround time. We have been seeing a less than 5-day turnaround time, but this just makes you aware that there could be a 5-day turnaround time. The group must decide if they want to do it by the 10th of the month prior to the effective date. So let's say you have a group that wants a May 1st effective date. They would have to make their decision by the 10th of April. And that's just because there's a lot of processes that go into getting their bank account set up. There's a lot that goes into that. So we do need the final yes, they want to move forward by the 10th of the month. We do have final blended fees for post-sale, and what that means is because we will give you final rates, but sometimes after giving you final rates, maybe you have 2 different options that you're providing, or they're doing a dual option or a triple option, then they would need to, and they, you know, the groups that, or the folks that you thought were going to be on one plan decide to switch to another plan. So we do have a final blended fee that comes out after. It's about 10 days after the group has been set up, where we will give you the final rates, and they will be calculated based on that final enrollment. And I will show you on the next slide here kind of an example. So the rates don't change. The plan rates don't change. It's just based on, if, like for this example on the Benefit 2, we had 5 groups or 5 people enrolled on the under Benefit 2. We had 5 in that first tier, that single tier, but then it dropped over on the final enrollment census down to 4. So this just kind of gives you an idea. If you look at the the red fonts, those are the changes that happen, and that shows the changes at the bottom, how that is blended together. So that, again, comes out 10 days after enrollment. This will be a final rate. And, again, the rates aren't different. It's just based on, how the enrollment might have changed. So this just gives you an overview of the banking, again, the monthly bill, that it includes that administrative fee, it includes the stop loss premium and the estimated claims funding and that terminal reserve funding.
What else, maybe I could ask you, what else goes into that admin fee, did you say, besides broker commissions?
So the admin fee includes like all of the claims payments, the pharmacy payments, all of the banking, accounting, the managing of the network, you know, the wellness things that are also included. A lot of those are under that administrative fee. Okay. So for the billing of the so for the stable funding the first month, so like I talked to you before, the 10th of the month is when they would need to make their decision. So the 27th of the month, so again using that May 1st effective date, and they would need to know by the 10th of the month that they want to do it. The 27th is when that bill, that first bill, would be taken out of their account. And then following that, it would be between the 19th and the 20th, and that just gives some time to pull the information so that the group knows. And when it says, you know, the enrollment will true up, that just will give you an example of, let's say, last month you went a little bit over the amount, that the maximum that premium fee. If you went over, then the next month, if there was a surplus, then that would be absorbed within that. There wouldn't be an additional cost ever to the group, but it would be absorbed in the next fee, and that just shows them how that's working out. And then the 27th is when that money would be pulled. So it is pulled the 27th of each month, but you will, the group will receive the bill the 19th to the 20th to just give them some time to kind of really look it over. So stable funding, we also have our online account management to the group where they can make some enrollment changes. They can't make a payment online as they would if they were a fully insured, because that is pulled from their bank account. But there is still some user management and some different tools that they have access to using that online account management. So I feel like I really breezed through that. If you have any questions.
Maybe, yeah, while they're thinking about questions they have, Tiffany, maybe you could let us know how many of these have you sold? You know, how much is this? Because I know you've talked about it. I mean, we've heard about it for a little while.
So we did come out with this product last year. We probably sold, I can't tell you an exact number, but we probably sold a handful of them because we were really marketing towards the groups before that Keep What You Have came out, so that made a lot of groups want to stay where they're at instead of shopping around. So that did hurt this product a little bit. But we do think that now things are changing, and people with the ACA, we think this might be an opportunity for them to look around, and maybe even groups that, you know, did keep what they have, their rates may be changing, so maybe this is something that they should take a look at just to see. I mean, it never hurts to compare, you know, this self-funding product versus what they have for fully insured.
So this is probably an obvious question, but maybe we can answer, you can answer it for us. So where are you seeing, though, are the types of groups that would be considering this?
Yeah, so it would really be the healthier, younger groups that are really finding benefit with this. You know, we only sold, like I said, a handful of them last year, but we have had significantly increased number of groups looking at it recently, because you know, they've had some changes demographically, so they maybe have some younger people that are coming on board. It would be beneficial for them that are at that lower risk, you know, where they might benefit from that underwritten rate.
Yep, great. Well, good. Well, I just think I'm glad you guys have a product. I'm glad for our brokers that you know you've got access to it and to be able to show clients. I think some of it you find you need to talk about it and talk about it again and talk about it again until it really gets embraced. But where do we start? We start by getting some rates and see. But I think especially for those healthier groups. So what you guys can do probably to be helpful is as you're talking to your employer groups and talking to them about the health and wellness of their group. And obviously, if somebody's super sick group, then they probably aren't going to be a good candidate. The rates just aren't going to be there for them, right? So, so you guys can be helpful too to say, you know, until you get a healthier population, or they might have somebody that's been ill and they're going to be, you know, coming off the group or whatever. And so maybe it's a timing thing on when they actually look at it. But okay, well, let me just pull over here. I'm just going to look next to you here and see if we've got any questions.
Okay. And just an added comment to that, too, you know, we've also seen an increase of plan sponsors that are wanting to get more involved with the wellness of their folks, so trying to get them more motivated to take more action. This is something where we've seen them more interested in this type of a product because they are really trying to get their employees to be healthier, make healthier decisions. So they can see the benefit when their claims are going lower. You know, this is a great, maybe a great option for them.
Very good. So our first question is from Mark, and he says, do you still need a TPA?
No, you don't need a TPA.
Because you guys are acting in that capacity.
Correct.
Yeah, okay. Great question, Mark. See if we've got any other questions here. I think kind of back to the point of you guys knowing about this, and again, the timing might not be right for every client right now, but the fact that you've got it in your arsenal and that you can talk about it. And Tiffany, maybe you can comment too on your availability. If there is a group out there that would like someone, would you be willing to be able to travel, go see our agents and help them?
Yes, absolutely. Anytime that you have somebody that wants to have a Coventry representative go out there and meet with the group with you, or even just meet with you to give you more information, I'm certainly open and willing to do that, absolutely.
And maybe this is a good time also to comment that Coventry has changed their structure. And some of us in the past were somewhat hesitant to engage in a Coventry representative because they were competing with us out in the field. And I'll say in particular in the employer group space. And maybe you can comment on how your structure has changed and how that really isn't an issue for us anymore.
Yeah, that's a great point to bring up because we are very broker focused. We are driven by working with you guys as partners. We want to help you secure those, you know, we want to help you secure those sales with Coventry. We want to help you, and we are also excited to work with KHI and work with those relationships through you.
Because I don't think, and correct me if I'm wrong, but I don't think you have salespeople out in the field selling direct anymore in the employer group space.
Right, that's correct. We do not have anybody out going out knocking on doors and selling. So that has changed a lot. I know we did at one point have that, but that is no longer the case.
And you're relatively new to Coventry and Aetna, and so Tiffany doesn't have that history of ever competing with us, and and so we're excited about our new relationship with Tiffany, especially in continuing our strengthening our relationship with Coventry as they become Aetna in all of their products, and I think that'll happen over time. But right now, we're still branding. The small group space is still being branded Coventry. We have strength in that in the small group space here in Iowa. Is that part of it, do you think?
Yeah.
Yeah, okay. All right, I don't see any other questions. And Tiffany, you did go through that a little quickly. And a reminder that we will have this out on our website this week with not only the presentation, it'll be in a PDF format, of course, but the recording of this session as well. And, of course, contact a member of the KHI team. Nakia is here in the room with us and leads our efforts for our agents on their employer groups. So make sure you get a hold of one of our folks, Nakia, Tricia, would be good if you have questions or want to start working on getting some rates. And thanks again, Tiffany, for being willing to also travel. We have agents, of course, across the state. And if you guys find a great opportunity and the rates come back looking really, really smoking hot, I think that'd be a great opportunity to have Tiffany come out with you and help to explain this as that Coventry representative. And not that you can't ask any other questions throughout, but what we do want to do is make sure you're aware of the other products that Coventry's offering now through their Aetna branded. So let me just get to the other presentation here real quick. Okay, so I'll go ahead and let you start there.
Okay, great. So we'll be doing a conversation about, or I guess a review about the Aetna specialty products, and Aetna does call their ancillary products specialty. So if you hear the word specialty, that's what we're referring to with our ancillary. So again, our core values, just wanting to make sure that you know that we are really focused on the people that we serve, and everything that we do is surrounding that. Our agenda today, we will be talking about our vision, dental, life, and disability products in the 2 to 50 segment. So for our vision products, we have either standalone or we can do it with a medical plan for 2 or more enrolled. So we can do a standalone with only 2 enrolled. That is going to be a voluntary or non-contributory product. This gives you an idea of the plans that are available, and when it shows, like if you look at the basic plan where it says 12/24, that is going to be, you can select a 12 months for the frame allowance plan, or you can do a 24-month for the frame allowance. So the benefit would still be, you know, the benefit's the same. It's just going to depend on whether you want it to be a 12 or a 24-month allowance period.
And the rates change, obviously.
Yes, yeah, correct. Yep. So we have our basic, our plus, and our premier, and it's just going to be a difference between the co-pays for the eye exam, the allowances for the frames, and the co-pays for contact lenses. And then with our vision plans, we do also offer some discount that you would receive if you go to an iMed provider. So we do have providers that are not iMed that's in our network, but if you do go to an iMed provider, there's some additional discounts that you may receive, and that could be up to 40% off of eyeglasses, 20% off of your remaining frame allowance, 15% off of your contact allowance, and then up to 15% off of your retail laser eye surgery. So those are some great benefits to add on when you're looking at the Aetna Vision plans. So this gives you an idea of our network. We have over 60,000 vision providers nationwide, and this, like this says, it includes some of your neighborhood eye doctors. So if you go to an eye doctor close to you, chances are they could be a participating provider. We would want you to check the aetnavision.com network to find out, but then they also include some of the larger chain stores, so like your LensCrafters, Sears, JCPenney's, those are all going to be included as well. And a lot of them are also going to be your iMed providers, so would be able to get those discounts from them. Moving on to Aetna Dental, we are the largest carrier that sells dental as well as medical, and then we are the 3rd largest dental carrier. We have a very wide variety of plans that are going to be different as far as deductibles, as far as the cost sharing goes. So, you know, I don't have a design we don't have plan designs like a grid available, but I'm actually working on trying to put something together to make it a little bit easier. But we have a variety of plans, and those are going to be voluntary or contributory. We have our DMO plan network that is going to be mainly made up of the Aspen dental providers, and they are going to give you your lowest cost plan that you're going to need to stay within network. There's no deductible and there's no maximum annual benefit. The preventive and basic services are going to be covered at 100%. Now we also have the PPO network that's going to be a broader network. There is out-of-network coverage at a higher cost share. There are different levels that you can pick with the variety of plans where you can pick, you know, the cost share being 60% versus 50%. So we have some different options available. And then again, these are going to be preventive is covered at 100%, but the basic and major services are going to vary based on the plan's level. And again, we have a lot to choose from. The deductibles are also going to be varied on the different plan options. So you can take a look at the online directory at Aetna.com, and you can select DocFind and then navigate your way to the dental network to find the providers in the group's network area. This just gives you an idea of the PPO providers, and this is in Polk County. So you will see that out of all of the PPO providers, Aetna is on top, and then we do have the dental, the Delta Dental Premier that is a little bit different, but wanted to show that they are on there at a little bit higher than us. But again, their network, that network's a little bit different than like their Delta PPO. So there are a lot of tools available to groups that want to select a dental plan. We have an estimate calculator that helps give them an idea of how much cleanings and crowns are going to cost. We also have a resource where they can go to that they can find some information about best dental health, how to keep up their teeth, and then we have all of these mobile apps on the go. So a lot of great resources for helping people keep their dental health up. So here are some of the key underwriting guidelines. We do have a minimum of 2 lives if enrolled with a medical plan. We do have 3 as standalone plans, and we do have a minimum of 3 lives, whether it's medical or standalone. So we would have to have 3 enrolled. And then for the participation for 2 to 3, it's 100% participation, excluding the valid waivers. From 4 to 50 eligible, it's 75%, and then a minimum of 30% for the 51 to 100 eligible. Those are for the standard plans, so that's also, they call those the contributory or standard. They're pretty much the same. So the voluntary plans, those are going to be 30% for 3 to 100 that would need to be participating, excluding valid waivers. And again, must have 3 enrolled. There are some industries that are excluded. However, if they are enrolling in a Coventry medical plan, then those will be waived. And then we do have waiting periods that apply to the PPO and indemnity plans, but not to the DMO. And they can also, and it also depends on like if they're doing the orthodontia plan. So there's some different variances, so it really kind of depends on the plan that the group is looking at or selecting. So moving on to Aetna Life, we have over 160 years of experience. We support over 8 million members, And we have some different plan options available that are affordable to employees. So we have basic, supplemental, and dependent life insurance plan options. They work like building blocks where you do have to be enrolled in a basic life in order to obtain supplemental and dependent life. And again, I just want to point out that I am talking to the 2 to 50 segment, so this is different on 51 plus. So we do offer the basic protection, and coverage is, conversion is an option, and it is portable if you are for the supplement and the dependent, not for the basic. And then we do have the premium waiver provision option available as well. So then we also have the Aetna accidental death and dismemberment insurance. This is going to be similar to others out there. With the, we do have this for 2 to 9, but it does have to be included in with a medical plan, there's more information about that on a future slide. This is just going to give you some information about the value adds of selecting an Aetna Life. So we offer to the members financial, legal, emotional, and physical support. This gives you an example of when they're living, the type of support that they have available to them, as well as if they become ill or after they have passed, and what's available to their loved ones. So you're going to see financial services, you're going to see legal access, and bereavement counseling. These are just some of the value-added benefits that are available when you select a life plan through Aetna. So this just kind of hits on a little bit more that is available. So the legal information or resources is available to the dependents at no additional charge, as well as the members. Dependents and beneficiaries have access to the legal forms and information online, as well as a victim of identity theft kit if they would have that problem arise. This kind of gives more of a high-level detail of the Everest funeral planning. So it does have a nationwide database of funeral homes, so you can see prices from all the funeral homes across the nation. And they do offer negotiation assistance on pricing, as well as family assistance and plan implementation and online data storage. So if you were to go out there and get all of your funeral plans put together and you've had it negotiated, the pricing, then that would be really helpful for your family when they go to implement the funeral once the member has passed away. So this is a great resource for really helping people be on top of their funeral arrangements so that their family is not left with the burden of having to really figure all of that out after you've passed. So this is more of the support for families. There's checklists for what needs to happen after someone has passed away. It helps get the conversation starting. It can be an uncomfortable conversation to have. So this just helps you get that conversation started, helps you know what needs to happen with the checklist. It can be really hard and stressful when you have no idea what to do when somebody passes away. So this is really helpful, providing those printable checklists, as well as the bereavement counseling. I just think this is a fabulous resource that that when you're terminally ill, that you have an unlimited number of counseling services through Aetna's behavioral health. It's a telephonic access, but there are so many people that when they do become ill, they may be home not working, but yet their loved ones have to be working to help pay those bills. So this is so helpful for them to be able to pick up the phone and just talk to somebody about how they're feeling. And then they also offer 3 bereavement sessions for family members once the member has passed away. So we have our short-term disability, our mid-term disability, and our long-term disability. The short-term disability is going to be the weekly benefit of 50 or 60%, and it pays up to 13 to 26 weeks and is non-occupational and is a 2-year rate guarantee. The midterm picks up either following the short-term disability or can start after 30 days if short-term disability is not offered. And then it is also either non-occupational and occupational. And then there is a 2 to 5 year benefit duration that you can select, and then there's also a 2-year rate guarantee with the midterm. And then we have our long-term disability that is, again, 50 to 60% monthly, and it begins after short-term disability and is occupational and not occupational. And then it also has the 2-year rate guarantee.
Tiffany, on this product,
yes.
This is really unique to you guys, this midterm disability concept, right? Because I haven't heard this offered by anybody else. So what are you guys finding in terms of, are people maybe, instead of offering a short-term and a long-term, they're offering the midterm and trying to, the happy medium between the two? I mean, I don't.
Yeah, and I don't have a lot of experience with this because this is rather new to, Aetna's or Coventry selling the Aetna products. So I haven't seen that locally, but that would be a great question that I can go back and ask others in other areas that have been selling it longer. What is the strategy behind the midterm disability? But it does make sense that it would be something like a middle of the road so that they didn't do one or the other.
Unique offering and maybe better than nothing, and like you say, you kind of, close the gap between short-term and long-term. But okay, I just wanted to make sure we pointed that out, that this is pretty unique offering.
Yeah, no, that's great. So here is the life and disability underwriting guidelines. So again, for this you'd have to have 2 eligible, you can go down to 2 if there is with a medical product, but as a standalone you would have to have 26 lives. And then we do have, for the 2 to 9, it is 100% employer paid with 100% participation. And then the 10 to 100, you would need to have at least 50% participation and then you can either do 50% employer paid, or if you did the 100% participation, then it would have to be 100%, 100% employer paid, then 100% participation. And then that's just for the basic term. And then again, the building blocks on the supplement and dependent, you must have the basic to have these 2 options, and is 100% employer paid or employee paid, and then must have a minimum of 4 enrolled. And then with the short-term disability, that works the same as the basic life as far as the participation and eligibility goes. And then the long-term is a minimum of 10 and at least 50% employer paid.
And the midterm.
Yep.
Okay, long and mid. Okay.
Yes, sorry, yes, correct. Okay. So this is gives you what's required for getting a quote. We do have rate sheets available for the vision, so you don't have to process a quote. That can be an immediate thing. For the dental and life, we do require the group's information to process a quote, and the turnaround time on that is 3 business days. So these are the items. So we ask for the current plan and enforcement booklet if available, the prospect's name, address, effective date, their SIC code. Again, we do have some SIC codes that are going to be ineligible unless they are combined with a medical plan. And then we would need the number of enrolling as well as eligible, the dependent level census that includes the home zip codes, and the employer contribution information as well. And for life and disability, it's going to be the exact same requirements, other than we would also need to have the salary and class schedule if they are doing a class schedule. We would need that information as well. Okay. So that is all I have for the specialty. If you have questions, I would be happy to answer them for you.
So other than, quick question, so other than some of the participation leniencies, is there any, there's no pricing benefit by taking the Aetna specialty products and coupling those with the medical, the Coventry medical?
No, not for the 2 to 50 segment. In the 50 plus, we do have some discount benefits available. So if you do have some groups that are in that range, I would definitely encourage you to ask about it, because, you know, we've had groups where the discounts pay for the specialty products itself. So, and even have saved. We've had groups that saved a lot of money doing a combined. So the more products that they add on, the more discounts they're going to see.
Okay, good to know. Good. And Dominic Bottenfield is still our representative that's helpful, and he's been with us. Actually, he was in the 2 to 50 space for a while, and now he's 51 plus. And he's actually going to stop in and see us here, I think, this afternoon. And he's available as well. If you've got, you know, you get some rates back, you're working with our team headed by Nakia again, and see how Coventry/Aetna's rates are looking, whichever the market size is. And Dominic as well as Tiffany are available to go out on calls with clients for you if you need that. So, all right, well, let's just check and see if we've got any other questions or comments. And it doesn't look like I'm seeing any questions at this time. Okay. Any other comments here from the room or any questions? And as I said earlier, we'll have these presentations as well as the recording saved out on our website. And it will be in a PDF fashion, as I committed to Tiffany that it would be. So you can reference this data, as we did go through it a little quickly, but certainly give a holler to one of the KHI staff if you find that employer group opportunity that's interested in any of the products, whether it's the stable funding product and really looking at that healthy group all the way down to 20, right? Make sure I got my number right
20
there.
20 enrolled.
20 enrolled, okay.
But 25 eligible.
But 25 eligible, okay. So that's as low as we can go on that healthy group that might be looking at some alternatives. And then looking at our specialty products as well. So I think for any of the market sizes, I think that sounds great. So I think one other comment I'd want to add, and then I'll let you wrap with anything else you have, Tiffany, and that is remember to stay tuned. Of course, our healthcare reform webinar is coming up this Friday. It's always the second Friday of the month, as you know, from 9 to 10. And we don't have a word yet on whether or not the definition of small group is going to get pushed out. It's supposedly, as of January 1 of 2016, small group definition should be 2 to 100, whereas it's 2 to 50 today. And when we were in Washington, several of us from Health Underwriters, it was being bantered around that they were going to try to push out that definition of having to define small group all the way to 100 and push that out a year or two. So it'll be interesting to see, because that you have to react then to that. You're building your platforms and products and rating. Even the use of Coventry versus Aetna is all tied to how these, you know, the 1 to 50 or 2 to 50 and then up to 100. So more to come. I don't have any more updated information other than we'll see what the legislators do, if anything, to postpone that definition change. Yeah. So.
Yeah. That'll be interesting.
Yeah.
Definitely.
So I'll let you wrap up with any other last comments.
Yeah, I did forget to mention that we do have a very nice stable funding brochure available. So if you do want that as a resource to help get some of those conversations started and just kind of help lay out what that stable funding is, we do have those available, as well as some flyers on these Aetna specialty products. So we will get those over to Nakia, and then those folks can help get those to you guys as needed.
Perfect.
Okay, well, wonderful. Well, thank you all for joining us on this Monday after Easter. I hope you had a great weekend, and I hope you have a great week ahead. Take care, and we'll talk to you soon. Bye-bye.